Everybody, it's Mark Yegge. Welcome back to another weekly stock market update. Hope you're doing great going into the weekend here. Guess what we got? We got another green market. It just happened today. So I'm just talking with my mastermind group, and we are excited about this market. Like I've been saying since, well, for the last several months now. We are in a melt-up phase. And every once in a while, you get one of these markets where you're like, I can't keep going higher, can't keep going higher. But it does, and it defies gravity. And that's because right now I think we have a Fed tailwind behind us that's it's going to give this market a bid up until the election. So I think we got a big year ahead of us. Who knows? But that's what certainly it feels like. And so you're seeing 4 green lights on the screen. So the market's certainly green. And when it's green, that's when you want to be doing your buying. And taking a look at the market indexes, this is why, right? This is the NASDAQ trading up at highs here. And looking very strong. The S&P 500 even stronger. That's what, 5 or 6 blue candles in a row, or green candles, however you want to look at it. But this one keeps moving up and doing it on decent volume, not great phenomenal volume, but pretty steady. Dow Jones, same thing. It's kind of consolidating up here at the gains. I don't think you're going to see just gigantic gains from here, but you will see some steady gains possibly. At least that's what the probabilities are showing. The New York Stock Exchange, a little bit of the weakest of all of them, I think probably because of oil. But again, nice, strong trend after a little bit of a dip a couple of weeks ago. The volatility index is down a lot, which tells you that people are not afraid to go into the market. So all these things are really good. And when the market's green, that's when you kind of say, okay, the probabilities are in my favor that the market's going to go up. It's no guarantee. But when the probabilities are in your favor, that's when you want to press your bets. And one thing I will say is that there are 7 distribution days on the S&P 500. I think it is. So there's some selling going on under the covers, but I think the NASDAQ is kind of painting over all of that. So just something that I'm seeing out there. I don't think it's anything to worry about. Lots of new highs being made. If you look at that bottom chart here, you can see that blue line. That's the average 10-day average of new highs on the New York Stock Exchange compared to the new lows. And you can see there's a lot more new highs right now. I'm going to talk 2 stocks. Apple, which is good news coming into numbers next week. There's a gap up, a couple of gap ups on the chart. There's filling a gap from the way down. And then I think it wants to make a run to this 200. If it hits 200 and it does it on good volume, I think 220 is in the picture easily for Apple. And Apple's become kind of a utility stock. It's not like one of those crazy growth stocks anymore. It does do some growth things, but generally it just kind of chugs up. And so you could see over the last couple of months, it's kind of made some corrections, but to the left side of this chart, it's really chugged up in a 45-degree angle. And I think that'll probably maybe establish itself back in doing that when it can get rid of this news cycle about the iPhone 15 and China and whatever else they're trying to throw at it. But to me, the stock keeps wanting to go higher, and we'll see. On the other hand, we have Tesla, which has gapped down yesterday. It was down like $25 or 12% yesterday on lousy car numbers, but the rest of the company's doing really well. And they look at this as a car company. And I don't think you can look at Tesla as a car company anymore. They're making robots, they're in AI, they're in the insurance business, they're in the energy business and the battery business. Like there's so many revenue streams coming out of Tesla that just to look at it as a car company, I understand it because 80% of their revenues come from cars. But like if you look out in the future, there's a ton of good stuff going on at Tesla. So I think it's getting punished for Elon Musk being who he is. And I think it's getting punished because people are looking at the margin erosion on the cars going into a recessionary year, which who knows if it'll be. So, but you can see the stock price talks, and when you have earnings that have declined, earnings are not declining, the growth is declining. And so you're seeing those red numbers 3 out of the last 4 quarters because they're lowering prices and lowering margins, but they're also lowering manufacturing costs. So Tesla has not been a fun ride at all. But if you can, we focus on collecting the juice every week, and you'd rather be in one of these growth stocks. That's why we talk about stock charts all the time because you want to be in a stock chart that's going up rather than one stock chart that's going down. But if you look long term, you're collecting 1 to 2% a week, which is what we do. So that was a lot, but not a lot. So I don't want to blow you away here. I'm glad you're here, and hope you have a fantastic weekend. And there's more to life than making money, but it certainly makes it a lot more fun if you can do that. Have a great weekend, everybody. See you on next week's stock market update. Take care.